Good day, everyone. For this discussion, we will be talking about separate and consolidated financial statements at the date of acquisition and subsequent to the date of acquisition. So I'll be talking about the theoretical concept of these things. And si Ma'am Joyna ang magdi-discuss sa inyo about the accounting part. So for me, I'll be talking about the lecture part of this. So in the past topics, nag-usap tayo about business combinations in which two entities either create a new entity, no? They combine to create a new entity, or ang isang entity ay na-absorb ng isang entity through a statutory merger, and yung isa naman, yung may new entity, yung statutory consolidation. So yun, two entities become one. But dito, ang pag-uusapan natin, there are two entities that are separate. Yung magkaibang entity, ito ang pag-uusapan natin. But one entity controls another. So, mayroon siyang influence, no, not just significant influence, but really control because probably, no, may more than 50% siya na ownership sa company. So this relationship is what we call a parent-subsidiary relationship. And ang pag-uusapan natin, how do we present the financial statements separately and on a consolidated manner for these two entities na pagkaiba naman pero parang isang entity lang kasi may control yung isa doon sa isa. So in acquiring for this type of entity, in acquiring another company, the acquirer must allocate its purchase price to the fair value of the underlying assets and liabilities acquired. So you're still acquiring a company na in this matter, but hindi lang talaga siya nagko-combine. Magkaiba pa rin sila na company. So with regards to the purchase price, then you allocate the price to the fair value of the underlying assets and liabilities acquired. So when this occurs, the acquiring company is generally referred to as the parent and the acquired company as a subsidiary. So when you present this sa yung financial statements, it will be presented as investment in subsidiaries, or if isa lang, investment in a subsidiary. Magkaiba ito sa financial instruments mo na held for trading, FVPL, available for sale, and yung investment in associate. I'll discuss later. No, yung investment in associate, less than 50%, but maybe more than 20%, basta may significant influence kapag investment in associate. But for investment in subsidiary, meron kang control. That holding any remaining stock in a subsidiary is referred to as the non-controlling interest. Any joint relationship is termed an affiliation, and the related companies are called affiliated companies. So when you have an investment in subsidiary, pwede na hindi mo wholly owned yung company. Maybe you have an 80%, I've said no, more than 50% lang naman ang kailangan para magkaroon ka ng control. So maybe you will have 80% ownership. So the other 20% is called the non-controlling interest. So these are the investors that own your subsidiary hindi mo na you do not control. So they may have a share also in the decision making of the subsidiary. But if there is what we call a joint relationship or joint control over a company, then that's called an affiliation, and you call your that's companies as affiliated companies. So each of the affiliated companies continues separate legal existence, and this investing company carries its interest as an investment. So for an affiliated company, separate sila ng existence. Okay. So to continue, the affiliated companies, so parent subsidiary, they are also called affiliated companies, continue to account individually for their own assets and liabilities, with the parent company reflecting the investment on its books in a single account, which is, as I've said earlier, investment in subsidiary. This account will ultimately be eliminated in the consolidation process to produce a set of consolidated financial statements. Itong sa investment in subsidiary, when we do the consolidated financial statements, mai-eliminate ito because later on we will understand the concept. Why do we need to eliminate? However, the investment account will be maintained in the parent records. Thus, an important distinction is noted between the consolidated statements and the parent-only records for statements in the case of stock acquisitions. So, itong consolidated financial statements, although meron kang mga journal entries to eliminate these accounts or to combine these accounts, this will not be this will not continue sa or this will not affect the records of the company. Meaning, gagawa lang itong mga journal entries during lang sa consolidation. So this will not persist. You will not record this in your books, but only for presentation of your consolidated financial statements. So after mo ng consolidation, so when I say consolidation, you combine your your financial statements. Hindi ito consolidation na statutory consolidation, but a consolidation of your financial statements of the parent, of the subsidiaries. Combine mo lahat ng financial statements nyo. So, there is a process there. But that process, hanggang doon lang siya. So, when you present your separate na mga financial statements, hindi na yun magsasubsist yung mga entries mo. Okay, so, the levels of investment now of in another company. So the acquisition of common stock of another company, okay, only common stock receives different accounting treatments depending on the level of ownership and the amount of influence or control caused by the stock ownership. So the ownership levels and accounting methods can be summarized as follows. So passive investment, generally under 20% ownership. The initial recording is at cost, including broker's fees. So for income, you will just record the dividends declared, except now kung stock dividends, because stock dividends do not affect your investment because you'll be using the cost model in passive investment. And usually ito yung you'll be accounting for using financial instruments, can be again held for trading, available for sale, FPPL, FPOCI. So depende na yun. And then we have here the strategic or active investment. So passive lang yung isa. So for an active investment, you have influence or significant influence, generally 20%, 50% ownership. Initial recording still at cost, including broker's fees. So pag record mo ng income nito, you will record share of income, your share of income or loss, which is your investment income, and the financial statements. And then the dividends also declared are distributions of income already recorded. So the dividends declared reduce your investment account, which is using the equity method. I think you've discussed this in your intermediate accounting. So what we'll be discussing about is this. When you have control or controlling, generally more than 50% ownership or over 50% ownership. And the initial recording is at cost. So dito you have ownership still of share of income or loss. But there will be adjustments when recording your example investment income. And generally you don't really record investment income because what you will be preparing is the consolidated net income. So you will since you have control, you will think of the other entity as part of you. You are just one entity. Although during the year, magkaiba kayo ng operations, but at the end of the year, you will present as one yung inyong financial statements. So to illustrate the differences, let's look at this example. Assume that the investee company paid 2,000 in cash dividends. The investor would prepare the following income statements depending on the level of ownership. So, okay, dito may tatlong column for passive investment na may 10% ownership, may 30%, and may 80% ownership. Okay, so ano ba ang treatment nito? Okay, so there's a note here. The term investor is used when ownership in common stock is 50% or less. And acquirer is the term used if more than 50% or 51% or more. So dito sa ano, you're an investor here. But for if more than 51% naman you have control na, then you're called an investor. Ay, rather an acquirer. Okay, so still additional info in the ano, dito sa acquirer mo, meron kang 38,000 na net income or sa yung consolidated net income, and part of that is 30,000 is from the parent, and the 8,000 is from the subsidiary. But the consolidated net income is 38,000. So ang ginawa dito is you separate kung yung part mo lang, yung ownership mo sa net income or yung share mo sa net income, which is 30%, 100% yung sa sarili mong operations plus 80% sa operation ng yung subsidiary. And you will recognize the non-controlling interest in the consolidated net income, which is 20% of 8,000 is 1,600, and the total is consolidated net income of 38,000. So given pa rin yan, no? Okay, so with the 10% passive investment, no, doon sa 10% na passive investment dito, let's check 30,200 na net income. So ang share mo dito, no, you will just be reporting the dividend income of 200. Okay, so the investor included only its share of the dividends declared by the investee as its income. So hindi mo na sinali yung share mo ng net income sa the company that you invested in. You just recorded dividend income. Now, for the 30% influential ownership interest, the investor reported 30% of the investee income as a separate source of income. So here, 30% since 8,000 man yung sa subsidiary. Okay, so you recorded investment income, 2,400. You don't record dividend income because it will be presented as a deduction to your investment, not part of your net income. So only your investment income kapag meron kang significant influence or this is an investment in associate. And lastly, with an 80% controlling interest, so you are now termed as the parent, then you merge with the investees, now subsidiary, nominal accounts with its own amounts. So there's no longer dividend and investment income. So let's check. You will combine all. So itong gross profit mo plus your expenses both nasa iyo at saka sa subsidiary mo. At 100% ito. Okay? So this is 100%. So you consider your subsidiary as really part of you, even if you only have 80% ownership with that. Because later on, you will have to break down this 38,000, which is itong na percent na ni-breakdown mo. Okay, so consolidated net income, this is your total. you and your subsidiary, 100% of your subsidiary na net income. But para makita mo na hindi sa'yo lahat ng net income na to, you will declare or disclose the non-controlling interest in the CNI. Okay, so a single set of financial statements replaces the separate statement of the entities. If the parent owned a 100% interest, net income would simply be reported as 38,000. So if 100% yung ownership mo doon sa subsidiary, then no need for you to disclose itong mataas na account non-controlling interest in consolidated net income. Okay, yan yung meaning NCI and CNI. So you don't need to disclose that if you have 100% ownership. But since, for example, you only have 80% ownership, then you need to separately disclose this. So since this is only in 80%, so the distribution, the controlling interest is the parent income. Yung 100% income mo nasa iyo lang, which is yung 30,000, plus the 80% share mo sa income ng yung subsidiary. And you disclose separately the non-controlling interest, which is 20% of the subsidiary not owned by the parent. Okay, so I hope that's clear to you. Let's proceed to controlled entities. The concept of control. Ano ba ang control? No, so in layman's term, di ba control meaning may say ka. Ikaw ang nagdi-dictate no paano ka how you move, how you act, how you behave. So that's control. If you have control over someone. So in the same way with businesses, when you have control, then may say ka. No, and that says hindi lang influence no compared to investment associates na mayroon ka lang influence. This may control ka talaga kung anong sasabihin mo. Yun talagang matutupad. So there are many aspects of control that we need to be aware of. The two general types of controlled entities are subsidiaries and structured entities or variable interest entity. Okay, so before ko mag-talk about subsidiary, ano ba itong variable interest entity? So itong variable interest entity, nangyayari kapag you don't really have more than 50% ownership in a subsidiary or in the company you control. But you just have control. No, maybe meron kayong kontrata ng isang company, and according to sources that I've read, this happens when, for example, you as a parent, you need the resources of that entity, maybe for research and development, or maybe for settlement, for stability of your business. So you make a contract with that entity na you will have control over that entity. No, but you actually don't have more than 51% ownership, but because of a contract or a structure that you created with that company, meron kang control sa company na yun. Okay, but the most common is subsidiaries. The most common type of control is subsidiary. So what is a subsidiary? Subsidiary is a corporation or an incorporated entity such as a partnership or trust company that is controlled by a parent company that owns usually a majority of the voting shares, rights of the subsidiary. Since the stockholders elect a corporation's board of directors, holding most of the shares enables the parent company to control the composition of the subsidiary's board. So, paano siya nagkaroon ng control? Because since you have more than 51% ownership, and diba sa board of directors, by percentage ownership yan. So kung malaki ka ng percentage ownership, depende na rin sa inyong bylaws, then you can delegate, or you can siguro paano ba mag ng board of directors. You can put board of directors in that subsidiary according to your ownership. So for example, if may 5 board of directors, since you have 80%, probably you can put 4 board of directors. So of course, because of that, may malaki kang say sa direction of the company, because the board of directors are the ones laying down the strategic direction of that company. Kaya kapag may more than 51% ownership ka sa isang company, then you can dictate how that company behaves. So when assessing whether control exists, so how do you assess aside from a 51% ownership, more than 51% ownership, you need also to establish whether you're acting as the principal or just an agent of the other parties. So hindi pwede na dahil may say ka dyan sa company na yan, or you can dictate how that company behaves, may control ka na. Baka pwedeng agent ka lang ng totoong may control. So an investor that is an agent does not control an investee when it exercises decision-making rights delegated to it. A number of factors are considered in making this assessment. For instance, the remuneration of the decision maker is considered in determining whether it is an agent. So if hinar ka lang na mag-control dyan sa subsidiary, then and you are earning a remuneration, then probably you don't have control. You're just an agent. So this is the most important thing. No? Control is the criterion for consolidation. Kapag wala kang control, wala kang i-consolidate na subsidiary. So again, a subsidiary is defined as an entity that is controlled by another entity, the parent. So kailangan may control ka bago ka mag-consolidate. Control is the criterion for identifying a parent-subsidiary relationship and the basis for consolidation. Yan talaga. Now, the determination of whether one entity controls another is then crucial to the determination of which entities should prepare consolidated financial statements. So, sa lahat ng yung mga investments na in-acquire mo, you need to determine if you have control over that company. Only then can you consolidate that company with your financial statements. So required kasi yung mga my parent-subsidiary relationship, especially publicly listed entities, to present a consolidated financial statements. Kasi if you're just going to prepare your separate financial statements, although required din yan for other laws natin dito sa Philippines, a consolidated financial statements talaga is the one that will reflect the true standing of your entity. Because in reality naman, you almost acquired na that you're like one company na with that business, even if nag-exist kayo separately. Okay, so with regards to control, it can be achieved in many steps. Hindi necessarily na pag-purchase mo may control ka na agad. Although that can happen, no? But it can there are times also na by step mo siya in-acquire. So isang example ngayon recently, I've seen with Elon Musk acquiring Twitter. He acquired, I think, 9 to 10% ownership in Twitter. So ano pa lang yan, it's like passive investment lang, but until he actually expressed his intent to acquire the whole company 100%. So yun, he started out at 10%, and then now he's planning to acquire the whole company by offering this kind of amount. I don't know what's his purpose. Pero itong mga board of directors ng Twitter, ayaw nila. Kaya gumamit sila ng poison pill. I hope you studied that in your business combination. So the company used poison pill para hindi yun ma-execute ni Elon Musk. So the poison pill actually, what happens is that if talagang magpo-pursue si Elon Musk ng kanyang intent to acquire Twitter, then the company will allow the present shareholders to acquire more stocks or shares from the company sa Twitter at a discounted price. Therefore, increase yung share ownership. So, itong si Elon Musk na gustong mag-acquire ng 100% will continue to dilute his ownership. Magda-dilute ang ownership niya kasi more shares are being issued. No? So, at a discount pa yun. So, anyway, that's just recent happenings, and that's one thing I've read from the news. So, a business combination occurs when the acquirer obtains control of the acquiree. It is at the date of the second acquisition of shares that the business combination occurs. So, it is referred to as business combination achieved in stages, also called a step acquisition. So, in the same way, in acquiring control, there may also be a number of steps. So, here's an example. So, itong sa taas, may 15% ownership siya first, which is to be accounted for at PFRS 9. So, later on, nag-add siya ng 60%, so nagkaroon siya ng 75% ownership. So, there, he will be using PAS 27 or PFRS 10, which is the Consolidated Financial Statements. And the other example, no, he acquired, the company acquired 35% ownership, so accounted for as investment in associate. But later on, nag-add siya ng 40%, so naging investment in subsidiary niya yung company, which is to be accounted for at PFRS 10. So, pwede rin, no, from PFRS 9 to PFRS 11 to PFRS 10. Okay, so I think that's all, no, for control or consolidated financial statements at the acquisition date. Okay, so you may pause the video to take a breath, and the next part I'll be discussing about consolidated financial statements subsequent to the acquisition date. Okay, so let me pause the video. I'll pause also. Okay, so let's proceed to consolidation of financial statements subsequent to date of acquisition. The preparation of consolidated financial statements after acquisition is not materially different in concept from preparing them at the acquisition date, in the sense that reciprocal accounts are eliminated and remaining balances are combined. So, hindi ko na-mention kanina, no, but in consolidation, kasi consolidating financial statements, you will be eliminating accounts that are redundant. For example, no, investment in subsidiary. You will eliminate that account kasi you already are combining na your two companies and you don't invest in yourself. You know, although that's possible na sa ating mga personal lives, but in an entity, you don't invest in your own company. You know, so that's why it is important ang mga journal entries na i-discuss sa inyo ni Ma'am Claudel, so that you will be able to see what entries or what accounts are to be eliminated. On the date of acquisition, the only relevant financial statement is the consolidated balance sheet. So ito yung importante lang na during the date of acquisition na i-compute nyo kung magkano ang total nyo na consolidated financial statement if required. Maybe legally required siya mag-consolidate kayo. But after acquisition, a complete set of consolidated financial statements. And these are statement of comprehensive income and retained earnings statement, including also the consolidated balance sheet, are to be prepared after acquisition. Usually, ginagawa ito during year-end, during preparation of your financial statements. So what are the nature of eliminating entries? Ito yung importante na after acquisition. Okay, first, the investment account must be eliminated in the consolidated financial statements because from a single entity viewpoint, a company cannot hold an investment in itself, as I mentioned earlier. The subsidiary stock and the related stockholders' equity accounts must be eliminated because the subsidiary stock is held entirely within the consolidated entity and none represents claims by outsiders. So, mangyayari dito, no, you will eliminate your investment in subsidiary. But, yun, i-combine mo lahat ng assets, liabilities, and equity mo with your subsidiary. So, but from a somewhat different point of view, may ibang point of view rin na, but generally not applied. The investment account in the parent's books can be thought of as a single account representing the parent's investment in the net assets of the subsidiary, a so-called one-line consideration. So, yung investment account mo, pwede mong i-present para makita mo na doon instead na equity account, instead na combine mo yung retained earnings, shareholders, ganun, you present it as investment in subsidiary. Okay. But in full consolidation, the subsidiaries' individual assets and liabilities are combined with those of the parent, including both the net assets of the subsidiary as represented by the balance in the investment account, and the subsidiaries' individual assets and liabilities would be double count, the same set of assets. So in full consolidation, in generally applied consolidation of financial statements, combine mo assets, liabilities of your subsidiary with your parent. Therefore, the investment account is eliminated and not carried to the consolidated balance sheet. To achieve the elimination of the investment account, eliminating entries are required. So eliminating entries are used in the consolidation worksheet to adjust the totals of the individual account balances of the separate consolidation companies to reflect the amounts of all the legally separate companies into a single company. So ang mangyayari dito, you will be preparing a worksheet to eliminate. You will be doing eliminating entries. Ito yung importante sa consolidated financial statements, ang eliminating entries. Madali lang kasi mag-combine. No? You just add your cash, all your cash, you add all your accounts receivable, liabilities, your equity, but eliminating entries, ito yung ano ba tawag dito? Complex or matrabaho. Hindi siya complex. Simple actually, but matrabaho siya kasi marami kang i-eliminate or gagawin. And you will be preparing a worksheet. So, eliminating entries appear only in the consolidation worksheets and do not affect the books of the separate companies. So, as I mentioned kanina, itong eliminating entries or mga entries na gagawin natin during consolidation, they will not affect your separate financial records. So, after ng consolidation, yung journal entries na yun, wala na yun. During consolidation lang yun magagamit. Ito yung tanong ko noon. I asked my instructor before about this. Ma'am, I don't see hindi ko nakikita yung mga elimination entries dun sa succeeding na mga financial records ng parent or ng subsidiary. Bakit ma'am? Kasi ginagawa lang yun during consolidation, and after consolidation, erase na yun, wala na yun. But of course, you can use those eliminating entries as a guide for your next consolidation. Okay, so meaning the consolidation entries are only during consolidation. After that, go on with your separate operations. So consolidated financial statements should include only balances resulting from transactions with outsiders. Eliminating techniques are designed to accomplish this end. So first na yung consolidated balance sheet, you just combine your assets, liabilities, and equity, and then you eliminate yung mga dapat i-eliminate. And then for the consolidated income statement, is essentially a combination of the revenue, expense, gain, and loss accounts of all consolidated affiliates after elimination of amounts representing the effect of transactions among the affiliates. Okay, so interchangeable itong parent-subsidiary relationship tsaka affiliates. So the consolidated income statement is just combine. Combine mo yung revenue, expense, gain, loss ng magkaibang companies. The combined income of the affiliates after eliminating any intercompany transactions is referred to as consolidated net income. So, ang tawag doon sa net income nyo, no, na combine na lahat ng entities is called consolidated net income. This amount is allocated to the controlling and non-controlling interests. In the work paper, consolidated net income is reduced by the non-controlling interests share of the net, if any, of the net income of the subsidiaries to arrive at the controlling interest in consolidated net income. So itong consolidated net income mo, it's a total no of your net income and your subsidiaries net income. So total mo yun lahat na net income nyo. However, kasi in that consolidated net income, not all of that is your share in the net income. Tinatawag na controlling interest in the consolidated net income or yung interest mo sa net income. So what you do is you determine how much is the non-controlling interests share. And how do you determine that? By computing magkano ang non-controlling interest and you apply it to the net income of your subsidiary. So, with regards to the concept to this, with regards to the concept, rather the solution, we discussed again by Ma'am Joy. So, just imagine that you have all your subsidiaries, total mo lahat ng ano nyo, ng income nyo, and it's called a consolidated net income. But parehas kanina, you separated those net income that are not yours or that is not your share. So under the entity theory, all revenues and expenses of the individual consolidating companies arising from transactions and actions with unaffiliated companies are included in the consolidated financial statements. So sa consolidated net income mo, meron ka ring eliminating entries para yung matira lang yung transactions mo with other companies or unaffiliated companies. So again, the consolidated income statement includes 100%, 100% of the revenues expense, regardless of the parent percentage ownership. Regardless kung 80% lang or 70% or 51% ang ownership mo sa company na yan, your consolidated income must be 100%. As with single company financial statements, where the difference between revenues and expenses equals net income, revenues minus expenses, the consolidated financial statements equals consolidated net income. So same lang computation. So also with your balance sheet, even if you only have 80% na ownership, 70-51, you add all the assets and liabilities of your subsidiary. Kasi dyan sa equity mo, ipapalabas mo magkano ang non-controlling interest. It will be disclosed. So yun lang ang ang makikita na may nagmamay-ari rin pala sa iyo na entity. Parang yun yung concept ng non-controlling interest na sa subsidiary mo, which is basically a part of you, may nagmamay-ari rin sa kanya. Yan, pwede kaya yan sa relationships. And if all subsidiaries are wholly owned, all of the consolidated net income accrues to the parent company or the controlling interest. So in the event that 100% ang ownership mo sa isang subsidiary, then wala ka nang i-represent na non-controlling interest. But if one or more is less than wholly owned, you portion the consolidated net income accruing to the non-controlling shareholders. So yun yung na-mention ko. And itong statement na to, itong consolidated retained earnings statement that you'll be preparing, this is important kasi you will check the flow of your retained earnings. So the consolidated retained earnings statement consists of the beginning consolidated retained earnings, which is yung past year mo, plus the controlling interest in consolidated net income. So controlling interest lang ha, in consolidated net income. So hindi mo i-include yung share in the net income ng non-controlling interest. So that's the reason why you separate the non-controlling interest in your computation. So, or minus, no, if not plus. And also plus the parent company dividends declared. Okay, so if my declaration ka, so this is not a plus but a minus na, you deduct your dividend declaration if meron ka. And the net balance represents consolidated retained earnings at the end of the period, and the non-controlling interest in net assets is reflected as a separate component of equity. Okay, so as I mentioned kanina, the NCI, non-controlling interest, is a separate component of equity. So ito lang, yung sa consolidated retained earnings mo. Yung beginning plus the controlling interest in consolidated net income, and then dividends declared. So, di ba deduction nyo? Dividends declared. Yes, sa mga owners, deduction sa retained earnings. Now, for non-controlling interest, so non-controlling interest exists of a less than wholly owned subsidiary or less than 100% owned subsidiary have a claim on the income and net assets of the subsidiary, even though the subsidiary is consolidated with its parents and perhaps other subsidiaries. So, hindi naman natin sila i-ignore. And basically, hindi talaga tayo may-ari sa kanila. They also have an ownership with our subsidiary. Okay. So, let me talk only just an overview of the working paper or the worksheet you will be preparing in a consolidated financial statement. So accounting work papers are used to accumulate, classify, and arrange data for a variety of accounting purposes, so including the preparation of financial reports and statements. Although work paper style and technique vary among firms and individuals, we have adopted a three-section work paper based on the book, no? And the format includes a separate section for each of the three basic financial statements: income statement, retained earnings statement, and balance sheet. Okay, so okay. So in some cases, the input to the work paper comes from the individual financial statements of the affiliates to be consolidated. In which case, the three-section work paper is particularly appropriate. So, yung input mo is from the individual financial statements, of course, of the affiliates. So here's just some observations of the working paper. So should be noted, several observations should be noted concerning the work paper presented in the succeeding illustrations or in the books illustrated in the books. No? So number one is meron kang elimination of the investment account, as I've mentioned and explained kanina. And then allocated excess, which is the difference between fair value of subsidiary and book value. So the fair value and consideration transfer to subsidiary might have exceeded the book value for several reasons, such as the following: excess of fair value over book value of the subsidiary's net identifiable assets. This valuation may be accomplished each period in the consolidated worksheet, and the existence of goodwill. So after mag-eliminate yung investment account, possible mag-excess yung equity ng subsidiary mo at saka yung investment in subsidiary mo. So there are two reasons. Ito yun, may excess of fair value or there's an existence of goodwill. So isa yan sa mga i-determine nyo. So the second elimination entry is also identical to that which would have been made at the date of acquisition. It serves to distribute the difference between the fair value of the subsidiary and book values of subsidiary equity to the appropriate accounts, in this case to goodwill. So if my goodwill, you will recognize this on your consolidated financial statements. And then intercompany dividends. So you will be eliminating intercompany dividends. Intercompany dividends. Okay. So lastly, no, in your work paper, you have to determine the non-controlling interest in your consolidated net income. Kasi again, yung controlling interest mo lang in consolidated net income ang i-include mo sa retained earnings computation. So you really need to compute or separate the non-controlling interest consolidated net income. So dalawa ito sa non-controlling interest. You have non-controlling interest in your equity, which is separately disclosed, and you have your non-controlling interest in the consolidated net income, also separately disclosed. Pero yung isa sa balance sheet, ito sa uh, income statement. The eliminations column in each section do not balance. So note this, since individual eliminations may involve more than one section. The total eliminations for all three sections, however, must be in balance. So aside from the working paper, no, you also need to understand the journal entries para um, masabtan ang concept and also the practical application of this consolidation. So I think uh, that's what itong mga basic concepts na that I've discussed na with regards to consolidation of financial statements. So I hope you've learned something and I hope you will continue to study and learn. You have your books. Okay. So again, for the laboratory or the solving part, Ma'am Joy will be discussing it to you. Thank you again for listening and have a great day.